Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation today with the founder of Global Resource Investments Limited. Rick Rule is with us. Rick, we wanted to talk a little bit about the mining sector. You've done a great job so far in British Columbia, but let's take a step back and look at the big picture and our biggest customer. Right now, that's China. And China is in the midst of a government supervised, if you will, economic slowdown. What sort of ripple effect could that have, or is it likely to have, on the Canadian mining community?
I think growth in China will slow. I think it'll slow for a lot of reasons. It'll slow in the first instance because it would appear that the central government would like it to slow. It will also slow because a lot of Chinese growth has been built on selling things to Western consumers that Western consumers are less able to afford. If your demand chain backs up, your cash flow backs up. If your cash flow backs up, your own development backs up. And I think China, that will happen too naturally. In the longer term, I'm very bullish about China. If you look at the success of the Chinese diaspora around the world, including, of course, here in British Columbia, you think about what these people can accomplish. To the extent that these people become free to accomplish in their own country what they've accomplished in other countries, the outlook 10 or 20 years from now for China is fantastic. The ability that the Chinese have to create wealth is probably great enough that it'll make all of the rest of us richer, getting dragged along. But for the next 2 years or 3 years, the concerns that you express are very real. The engine of world demand for a lot of resources, iron ore, copper, zinc, coal, is China. And I see that demand slowing up. And I see the markets getting clogged and pricing pressure developing, particularly in base metal sectors.
And as prices fall on base metals, we look, of course, at what's the first reaction? You're a veteran of the mining industry. What happens when the prices start to come down? As the producer, do you lay off a shift? Do you just scale back volumes of production? What's your first response?
Well, no, those are rational responses, but the mining industry seldom acts rationally.
Oh, okay.
Miners are incurably optimistic people, and they always believe that a fix for them is around the corner. They engage in something called a last man standing contest. And what they try and do is increase production and lower their unit costs so that they can outproduce their competitors. It's a very perverse reaction.
So it produces a glut, if nothing then.
What we hope is that the mining industry has learned the lessons in the 1980s when they did that. What you hope is that the response will be like the response of Techcominco in the last slowdown, where they in fact do reduce capacity. That's what you hope happens. You hope that pricing discipline comes in the markets. When I say hope, I'm speaking as a lender, I'm speaking as a shareholder, I'm not speaking as a merchant in a community who makes his living selling things to people who were laid off from copper mines.
Sure,
I'm not talking about the social dislocation that would occur. I'm talking merely about the rational economic reaction to your own primary market slowing down.
Now, in the case where there is a slowdown across the board in the mining sector, a lot of people, speculators, investors, have looked to, over the years, junior mining companies as the springboard to either great wealth or huge disappointment. Are the juniors the first casualties of a global slowdown?
Not necessarily, but they're the most dramatic casualties. The majors might lose 50% in value, 60% in values, while vast numbers of juniors go extinct. They go to zero. The juniors are volatility on steroids.
Oh, yeah.
They're the most marginal of all the participants, and it's the marginal participants that get affected the most, both in terms of bull markets and in terms of bear markets. Think wide world of sports. You know, the beginning, the thrill of victory, the agony of defeat.
Agony of defeat, yes.
That's the nature of juniors in bull and bear markets.
So the fact that mining, the whole, base metal sector, as a spot for your investment dollars has basically been identified as not for the faint of heart for decades, and I doubt that's about to change anytime soon.
Not about to change.
And in terms of being able to be an important component of a national economy, if you see this kind of slowdown in China, which ripples through the Canadian mining sector, not only here in BC, but right across the country, Quebec and all the rest of it, what What then could we expect as a result of that?
Canada has challenges in the global context in mining because Canada is a high-cost producer. Canada benefits from good legislation, it benefits from a good regulatory climate, it benefits from a highly skilled labor force. The problem is that it has aging ore bodies, it has an aging workforce, it has a high-cost workforce.
Right.
What you look for in base metals production in particular are the most efficient quartile, the lowest cost producers. And Canada does not occupy that position in any of the major mineral commodities that it produces. It's not a low-cost coal producer, it's not a low-cost nickel producer, it's a fantastic nickel producer, not close. It is absolutely the low-cost producer worldwide in potash, no doubt about it. Low-cost potash producer. But in the other things, the things that you typically think of Canada being low-cost producers of, they've moved away from that posture. In bull markets, where margins broaden, the marginal producer, and Canada's a large marginal producer, do extremely well. So Canada will be a beneficiary of buoyant resource markets, but there will be contractions.
And we're in a fairly contracting sort of frame in the world's economy right now, aren't we?
I suspect that we're coming into a very interesting contraction.
Well, and again, at that recent conference in Vancouver that you were a featured speaker at, there were some pretty apocalyptic predictions of the next 5 to 10 years in terms of it's going to be a tough row to hoe.
I think that's accurate.
And that will ripple right through the entire economy, mining and all the energy sector.
That's right.
Well, on that cheery note, we'll take a quick break and we'll come back and talk some more with our special guest, Rick Rule, right here on the Money and Wealth Show.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.